Hey everyone, this is Robert Keens with goldsilverpros.com, and I'm joined again by a very special guest, Chris Vermeulen of the Technical Traders. Chris, how are you doing today?
I'm good, Robert. How are you?
I'm doing very well. So we've had a little bit of choppy markets here recently. I think on some fears of coronavirus, but also leading up potentially to the presidential election. What are you seeing in your charts?
Yeah, well, we've no doubt seen some weaker prices over the last month, and you're looking forward going into the election. I think the same story is kind of going to hold true. I mean, we do have a lot of mixed signals in the market. It's a really tough, choppy market here. But when you look from a cycle standpoint, seasonality wise, during a presidential election year like this year, October shows a lot of volatility. We see the stock market indexes have big rallies, big sell-offs, and I think that's kind of where we are. We might see the stock market chatter sideways in a fairly decent range for the next 2 or 3 weeks potentially. And I think that's going to put some headwinds for almost all asset classes, because really when the stock market collapses and there's some fear, we see most assets get pulled down with it. So I think we're in for a little bit of a rough ride. But I mean, to counter that, I mean, you hear, Trump's got COVID, and then he fires off his tweets saying you're going to see the biggest tax cut rate, you've ever seen. He's talking about higher stock market prices. If Biden gets in, I think there's going to be crazy more stimulus, which is good for the stock market. So, I mean, I think this market's going higher no matter what happens, but it still might be a little choppy as we're in these final weeks before election.
Yeah. Yeah, it's been interesting times. And I know gold and silver have retraced quite a bit lately, down from, I think gold was at 2060, 2070 range there a few months ago. It's come back down into the 1900s, although it's holding steady. And silver sort of in that $24, $25 trading range. What are you seeing there with the metals?
Yeah, so they're definitely trending in a downtrend as a swing trader kind of standpoint. We saw gold and silver break down, including the miners. And if you look at just the last maybe the month, that strong breakdown they had a few weeks ago, followed by this kind of bounce, looks a lot like a bear flag. So to me, this is the halfway point. I still have a downside target on gold of 1810. I think that could actually get reached potentially here in October. That's a stretch for gold. But I do think we're going to go back down and test the lows from 2 or 3 weeks ago for gold, silver, and the miners, because there's going to be some selling, I think, in the stock market. If we get a stimulus plan, I think people are going to continue to pile into stocks and maybe kind of go on the back burner for metals and miners to some extent short term. But I think we all know stimulus printing is good for metals longer term. So when you step back, the short term, I see a couple of weeks of weakness in metals, but overall they're in major big bull markets. They're fresh bull markets in precious metals, and it's a big bull flag that's a multi-month pattern, meaning we should see, once they start to rally, we should see a 2 or 3 month rally in gold, silver, and miners. So that's on the horizon probably later this year. After elections, maybe December, January is when I really think we could see that really take off and get some traction for metals.
Yeah, I agree with you. I think the market almost needs to see what happens with the presidential election before they take their position on gold and silver. So in either case, it could be bullish, but probably more bullish if the Democrat gets elected and we do have those stimulus measures. I know they're talking in the debates about the new Green Deal and those types of programs, which would be a lot of fresh money that would have to be put into the system for that. Obviously, a lot of people would see that as bullish for gold and also bullish for stocks at the same time.
Yeah, that's kind of the big wild card, is I think we could eventually see the stock market actually have some super cycle to the upside. I think we're in a super cycle already. And they could go into a crazy super cycle and just keep going higher and higher with printing of money. But we could also see the metals and miners enter they're in a bull market. They could just continue to rally and potentially even outperform the stock market. And this rally could go on for years for all we know. I'm not about picking tops. You got to stick with the trend, but what's going on here is bullish for stocks. It's bullish for metals. And as the uncertainty and the stimulus and the debt keeps climbing, I mean, it makes you want to own more metals, and the mining stocks are definitely going to perform multiple times better than the metals themselves. So it's kind of that perfect storm, and we just have to see how things are going to unfold and stick with the trends.
Yeah, I've had a lot of questions on the mining stocks. They really haven't followed gold and silver as sharply as the metals price has. It seems like either the market doesn't believe the rally in gold and silver, or the shutdowns, which uh, hampered the mine production, and some of the earnings may have dampened the spirit in the mining sector. Do you see that recovering anytime soon, or do you have any idea of where that may be going?
Yeah, a lot of it's going to come down to when does the stock market. I mean, you could argue it's already had a bear market, the world's fastest bear market, but I still feel as though there's probably one coming. And if one does start, then miners are a long ways from actually starting that mega run that we're all kind of expecting. Because when the stock market collapses, we're going to see the miners get pulled down, just like in 2008, 2009. You'll see the miners will be the first to recover and start to take off. So there could be a lot of headwinds for miners when you look forward 3, 6, 12 months from now, if we have a bear market in stocks. But overall, I mean, we're definitely saw gold break into a bull market last year. Like we're talking like, 16 months ago, it broke into a bull market before miners. Typically, I see miners perform better and give signs that they're breaking out, and then gold follows and silver's after that. But
Mhm.
this time around, we've got global fear. It's not just speculative into mining stocks in North America. It's actually the whole world is actually shifted a year ago into gold as a currency, as a safe haven for current for their money. And that's why I think gold's been leading the way. And people are more at this point kind of concerned about preserving wealth with holding physical metal. And they're not fully convinced, I guess, that the mining sector stocks are ready to rock it. So we're going to have to keep your eyes on it. But I mean, at this point, they're in a bull market. Gold, silver, and miners all in a bull market. You can't ignore it.
Yeah. And it seems that people want to stay liquid in this time. I think there's still a lot of uncertainty around the economy. Are we going to continue this deflationary trend due to COVID, or are we going to recover? It seems that people are just trying to stay where they think they can be safest and most liquid in case they need to access their wealth. As I look at the at CNBC right now, they have an article. Shopper Track is predicting a 25% drop in shoppers this holiday season. I know consumers are 70% of the economy, and definitely the holiday season. Black Friday was named because it brings a lot of the retailers into the black for the year. It's such a big part of our overall economy. If we do have a big drop in consumer spending, does that bode well for the stocks in the short term, or how should we read that?
It could definitely be tough on the retail sector, but it really depends on the actual stocks within the retail sector. Because obviously, a lot of retail have been focusing this year on moving to online, so they can not worry about people walking through the door. They can just continue to sell online. So it's going to be a real mixed bag. I think spending is probably going to stay where it is for online stores. It's going to continue to ramp up, especially with COVID kind of creeping back into the news and creeping back up in terms of how quickly it's spreading.
Hmm.
Um, yeah, I think if we don't get a stimulus plan soon, I think people are going to kind of start to hold back some of their spending. I know a lot of businesses, if they're not going to get funding, I mean, they're burning through their capital, they're burning through their tax-free loans, government loans. I mean, all these delayed ways to keep alive. But if we have another wave of COVID, then we're in serious trouble, because then the Fed and the banks are going to be stuck with all of these loans that people just took out to try and make it through the first wave, and they're just going to turn belly up and go out of business. So they're going to be stuck with all these debt issues going forward. So I think a lot of what's going to happen going forward is going to hinge on how the COVID wave 2 hits, whether it's just slows things down a little bit, we keep on going, or does it actually create a lockdown and kind of a big pandemic kind of wave again? Uh, so we'll have to really see how it hinges on that.
Okay. We're talking before the recording about a little bit of dollar strength here, a little bit of a rebound on the dollar. What are you seeing there?
Yeah, well, the dollar's been out of favor for a few months. Talking about all the stimulus coming out, I mean, it really went into a free fall. People just saying, "Hey, if you're going to print trillions and toss it out to everyone," I mean, they just liquidated the U.S. dollar, and everyone moved out of it. But now it looks like it's oversold. It's put in a bottoming formation, and now it's actually started to show signs that it's in a new uptrend. Now,
Mhm.
it's still below the 200-day moving average. The 50-day moving average is below the 200 as well. So it's in a strong downtrend, but it's showing it has signs of a bounce. And at this point, it has a bull flag, almost the same size and as the bear flag in gold and miners, which to me says, okay, if we're going to have some selling here in October, another wave of fear, then we're going to see the dollar rally, because we tend to see the dollar rally on fear. As people
Hmm.
liquidate all assets, they just go to the US dollar currency to sit in cash.
Hmm.
And that rising dollar is going to put pressure on the metals and miners, and we're going to see the dollar rally. So right now, to me, I'm bearish on the metals and miners simply because we're coming into I think, some weakness in the stock market potentially here, and the dollar's ready to rally. It's had a beautiful pullback. It looks really bullish on a short-term basis. So I think if you're in the dollar, we're looking for a bounce, but it's not going to be huge. Once we do get a bounce, we're going to definitely have to sell into the dollar because it's in a downtrend. It's more or less in a bear market. So any bounce here should eventually be exited and potentially short the dollar. It might not be the currency you want to be into longer term.
So we covered the dollar, gold, and stocks. And interesting comment you made about dollar strength may lead to a little bit of bearishness in the, or at least short-term bearishness in the gold and silver sector. The dollar is traditionally seen as a safe haven in times when people need liquidity. What about the bond market? Would you think that the picture there is going to improve anytime soon?
Yeah, so the US bond market's been in like a 30-year bull market, and I think it's probably on its last legs. And this is a major bull market. Any bull market takes a long time to reverse direction. And I think we may have seen kind of the highs for bonds. I think if we have some more selling in the stock market, bonds are going to move higher.
Mhm.
I don't think there's a lot of upside percentage wise with bonds. The high in March could be it. And I think that was almost kind of a blow off capitulation top for the bond market. And
Mhm.
bonds may really be out of favor. I mean, who wants to own bonds when you're paid over just over 0.5%, and the
Mhm.
currency value is kind of forecasted to lose 1.5% every year. So if you move to bonds, you are losing about 1% a year, just with the value of the currency falling and inflation and all those things. So it's not a great play, but when fear hits, there's panic in the market, people move to bonds. And
Mhm.
so when the March crash hit, there was only two assets that went up. That was bonds and the US dollar. The dollar rallied 12%. Bonds rallied. We caught a beautiful trade in at over 20%. But the last 3 days of bonds alone, it jumped like 25%
Mhm.
as a big capitulation spike, a blow off top, and then reversed and it crashed.
Mhm.
So I think we could see another push in bonds, but I wouldn't be looking for all time highs. And I think it's days are numbered for this bull market, just because people aren't really trusting the system, and there's no money to be made in it. You're losing money in bonds long term.
Yeah. In terms of portfolio structure leading up to the election and some of this volatility and uncertainty, what are you recommending or what are you doing for your portfolio?
Right. So we've trimmed some of our position off back in April. We started to trim off positions as the market was coming back up and bouncing. We hold some cash reserve. We're in precious metals. So that more or less the SP 500 precious metals kind of scattered there,
Mhm.
and then have some cash because I believe this market could collapse very quickly. There's no point in holding 100% position when we're walking through a landmine. It's like
Mhm.
news is coming out, elections, COVID,
Mhm.
conspiracies. I mean, bank fraud with trillions of fraudulent activities with the big banks.
Mhm.
So I'd much rather miss some gains than be fully invested and get hit really hard if something bad comes to play. So that's the way we're trying to do it, is just be very cautious. We're still taking part in the metals, we're long equities,
Mhm.
but we do have a little bit of a cash reserve there, looking for some new assets to get into. And that's one of the things we look at as the band strategy, which is the best asset now. And if you were to look at some of the sectors, some of the best sectors are the TAN ETF, which is solar stocks.
Mhm.
I mean, it's up like 175% or something like that. It's on fire. It's leading the way. Another ETF, clean energy.
Mhm.
Some other sectors, the home builders index has been outperforming. And so there's
Mhm.
a bunch of these sectors that, are not, there's some of them are maturing, I think, but overall you want to be in these leading sectors because those are the ones that hold up and the ones that rally exceptionally well while the stock market struggles and goes sideways. I mean, we've seen the
Mhm.
TAN ETF rally like 25% or something like that, while the stock market is down 10% in the last month and a half. So
Yeah.
You definitely, the leaders are kind of where the money needs to go, and that's what we're just looking for. But knowing there's volatility here in October, we want to kind of pick our poison, try and pick our timing a little bit, because if the market does collapse again, uh, high performing stocks can also pull back pretty quickly. So you have to wait for the market to put in a bottom or give us a new signal to get long. And that's when we want to get involved. And in talking about that, interesting enough, the small cap sector, the IWM, the Russell 2000, actually is the strongest performing um, ETF for the indexes right now in terms of just relative performance over the last couple of weeks. It's really kind of taking the bull by the horns, and it's on the verge of having a really big move. So it's interesting to see those little small caps coming to life. I think it has to do with stimulus plan just around the corner. That's going to help all these small companies with loans, paying, salaries, helping subsidize things. So there could be a rise of small caps, and that's a really strong sign for the economy. It's a strong sign for the stock market. Small caps tend to lead, and if they take the lead here, I think that we could be for another big leg up in the stock market.
Oh, very good. Now we've covered most of the major asset classes here in the U.S. I know you've done some research on the international equities. So what's your opinion on those as compared to, say, U.S. stocks?
Yeah. So when you look at all the major indexes across the globe, and you look at the long time frame, go back 10, 15, 20 years, all you need to do is take a quick glance at the chart, and you can see that one stock market has just been on fire, and that's the US equities market. And people always seem to chase money. That's where they want to go. So really, when you look back at all the other countries, they've been trading sideways, or they're actually lower over the past 10 or 20 years. It's definitely not the best place to put your money. And so the United States has been that. It's been that for years. And that's why we keep seeing money pile in to the US equities market. It's not just North America buying North American stocks. It's the whole world wanting to put their money into US equities. And that's why we've had this huge rally that just keeps on going. And that's what's been unfolding here. And I think it could continue, especially with what's going on overseas. With COVID kind of locking up, people are naturally going to want to move to, I think, the US markets to preserve capital. And when they move to the US markets, they have to convert their money to US dollars. And that's why we've seen the dollar perform so well over the last really year and a half and change, because people are moving to US dollars and then they're buying US equities. It's a double play. You're buying equities that are going up and you're buying a currency that's going up. So you get a lot of performance by moving to the States.
Yeah. I hear that you're going to be presenting at an upcoming conference. You want to talk about that for a moment?
Sure. Yeah. Wealth 365. It's on October 14th. And I'm talking about super cycles for the stock market and commodities, really kind of with a focus on the major stock indexes, the US indexes, gold, silver, and miners, and where we are and how to make. There's going to be a huge opportunity over the next 5 to 8 years as this cycle, a new cycle takes hold. So it's really exciting. I'm going to talk about cycles, how they work, why they work, all the different types of cycles. There's so many cycles that happen in the financial system. It's pretty interesting. And that's what I'm going to cover in there. And I'm going to show you kind of what to expect in commodities. We're starting what could be and should be a huge bull market in commodities. And this is just kind of the launch pad that gold and silver have built. I think there's a lot more potential there. And there's other potentials in other assets like cotton and all these other undervalued commodities as well. Yeah. And the nice thing is there's a basket of ETFs that cover commodities. So you can just play the whole commodity basket with one ETF and play the cycle on its own as well. So it's a pretty interesting kind of research and kind of forecast that's going forward here.
How can people find your research on the technical traders and get in contact with you?
Yeah, sure. So the technicaltraders.com, in the top menu, there's our free research section there. There we post all kinds of ideas, analysis on the markets, and you can opt into the email newsletter, and we'll send out occasional videos, recap kind of what you and I are doing here, very short versions, and give you snippets of what's hot right now, what's not, what we're looking at. And yeah.
Definitely very valuable information. Thank you so much for coming back on the program, Chris, and we hope to see you again in the near future.
Great. Well, thanks, Robert. Take care.
All right.